Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about how Sofi Technologies Sofi stock could surge up to $22 per share according to analysts. If you didn't know, Sofi Technologies is a Fintech company that offers a wide variety of financial products and services, but they are most known for their lending programs. They popularized themselves with student loan refinancing, and then they started to break into other segments such as personal loans, credit cards, debit cards, mortgages, investment accounts, banking services, digital banking, and financial planning, among a plethora of other things. They've had fantastic catalysts recently, including their acquisition of Golden Pacific Bancorp so they can become an official bank holding company, which was a major milestone for this company. So why does Morningstar as an institution and their analysts believe that Sofi stock could surge all the way up to $22 because that is their fair value price according to this article? This would mean that currently Sofi Technologies is currently undervalued right now, which would make it a fantastic buying opportunity. But what does the Sofi stock trade for right now? Well, Sofi, ticker symbol SOFI, currently trades for around $11.39 per share. The low-end analyst price target for the next 12 months is $16, and it's always fantastic to see the low-end price target actually above the current stock price, so that gives us a fantastic buffer of safety between $11 and $16. However, the average analyst price consensus for the next 12 months goes all the way up to $18.77, while the high-end price target according to Wall Street analysts is $25. Out of the 11 analysts that cover this stock, 8 analysts say to buy the stock right now, 3 analysts say to hold this company, and none of them said that this stock was going to underperform or to sell this company right now. But why is Morningstar so bullish on Sofi Technologies? Why are there price targets that range anywhere from $22 all the way up to $25 according to very bullish analysts? Well, this is based off of the fundamentals of the overall company, so let's talk about the fundamentals and the growth prospects for Sofi Technologies. Recently, Sofi Technologies SOFI stock has dropped around 40% ever since the beginning of November back in 2021. So the stock price of Sofi stock has been falling rather aggressively alongside many other fintech peers. So why is the SOFI stock falling right now? Well, the reason why Sofi Technologies is pulling back is because of the whole fintech and financial technology sector is also pulling back. But despite the Sofi stock price pulling back, the company still has fantastic foundations, mainly due to their 3 main business segments, which involves their loan and lending segment, their technology platforms, and their financial services segment. Sofi Technologies is directly comparable to other lending businesses and companies such as Lending Club Corporation, ticker symbol LC, and Open Lending Corporation, ticker symbol LPRO. Sofi Technologies is also comparable to Marqeta, which I did a video on a little while ago, and they are comparable specifically in the company's technology platform segment, while PayPal and Robinhood Markets, ticker symbol PYPL and ticker symbol HOOD respectively, they are both peers to Sofi Technologies in their financial services segment. So just right off the bat, owning Sofi Technologies is basically like owning Lending Club Corporation, Open Lending Corporation, Marqeta, PayPal, and Robinhood Markets, because Sofi Technologies has their hand in all of these segments. However, all of these peers have actually performed rather poorly ever since Sofi stock has started to plummet downwards. So it's not like only Sofi stock is falling right now, their entire sector is also falling along with them. And we actually know this because other fintech companies and lending companies have also been falling. We can even look at a very popular fintech ETF, such as the Global X Fintech ETF, ticker symbol FINX, which has dropped around 30% just in the last 6 months. And if you want a fantastic ETF that will diversify you in the fintech space, FINX is a fantastic ETF to own, especially if you like all of the companies that I previously mentioned. Sofi Technologies is the most competitive specifically for their lending business because that is their bread and butter that brings in the most revenues for Sofi Technologies, because it has accounted for around 77% of the total net revenues for the company in Q3 of 2021. However, eventually, the rotation will come back in and money will flow back into fintech companies which is why some investors are buying SoFi Technologies right now, waiting for the rotation to return. So is SoFi stock undervalued right now? Well, let's look at the revenues that they're supposed to bring in. So for 2021, they're supposed to bring in around $1 billion worth of revenue, and their 2022 forecast for the fiscal year is around $1.5 billion in top-of-the-line revenue, with the majority of this revenue coming from their lending program, which is going to be around $1.155 billion, while their technology platform is going to bring them in around $270 million, while their financial services business is going to bring them in around $75 million. However, as time progresses, they are actually going to become more diversified, and their technology platform as well as their financial services business is going to eventually match their lending revenues, which is fantastic news. However, SoFi Technologies needs time to scale these various segments and these businesses. For each of their business segments, their price to sales valuation multiples rank at around 6.5 times for lending, 9 times for their technology platform, and around 5 times for their financial services, which would give us a moderate price target of around $12.78 for SoFi Technologies. And of course, the current stock price trades below $12.78, which creates a fantastic buying opportunity for aggressive long-term investors. However, when will SoFi Technologies rebound to over $20? Well, this will clearly happen when investors start to rotate back into the fintech sector, which is going to create a fantastic catalyst for SoFi Technologies as well as many other stocks in this particular sector. However, this is going to be very difficult to predict exactly when this is going to happen. I would much rather buy SoFi stock right now at a very cheap valuation and wait for the rotation instead of trying to time the rotation when I don't know exactly when it's going to happen, because that would be timing the market, and I am not into timing the market. I am into investing into very foundational and very successful long-term companies that have fantastic growth ahead of them. SoFi Technologies is also extremely competitive, specifically because of the recent acquisition of Golden Pacific Bancorp, which you most likely know about. So now SoFi Technologies can operate at a bank holding company. This is going to cut their costs, lower their overall expenses, and they're actually going to be able to deliver even more competitive interest rates for their loans, on top of giving their customers fantastic returns with an APY of around 1%, which is phenomenal. This actually beats any other bank that I can actually think of off the top of my head. So they are extremely competitive in their checking and savings accounts because they are paying their customers 1% of the money that they put in, and very few banks are doing that right now, which actually makes SoFi Technologies an industry leader. However, this is only going to hold true if you have less than $50,000 in your overall account. SoFi Technologies also has a very strong balance sheet, and they have plenty of cash to go around. In Q3 of 2021, on their earnings call, SoFi Technologies said that they did raise capital, around $3.6 billion worth of capital in the last year, which includes around $1.2 billion of a convertible debt offering back in October. Thanks to SoFi's acquisition of Golden Pacific Bancorp and how they can actually operate as a bank holding company now, the company's consensus EBITDA, or earnings before interest, tax, depreciation, and amortization, has absolutely exploded. For instance, their EBITDA has increased by hundreds of millions of dollars. Just to give a quick example, in 2024, for the full year, their original EBITDA forecast, according to analysts, is $264 million. However, ever since the bank charter came in, that has more than doubled up to $641 million. However, Wall Street analysts have yet to change their price targets because they are actually waiting for the full year 2021 results in revenues and EBITDA to come in, and for the fourth quarter of 2021 to come in on their earnings report, which will be released on March 1st of 2022. And I think SoFi Technologies is going to release a very positive earnings report. And after this earnings report, that's when analysts will actually adjust their price targets and their EPS forecasts, as well as their revenue and EBITDA. So this is overall fantastic news for SoFi Technologies, and it's just a matter of time before analysts increase the price target for SoFi Technologies, which could operate as a fantastic catalyst to get SoFi Technologies above that $20 mark. Specifically, Morningstar is still very bullish on SoFi Technologies and says that the minimum fair value of the stock is at least worth $22. So if you are a long-term investor, it's going to be in your best interest to hold SoFi Technologies for at least the next 12 months to see how this company is scaling, because right now they are scaling very rapidly. But I would love to hear your thoughts down below. Comment down below your price prediction for SoFi stock in the next 12 months. Remember to hit the like button, subscribe if you are new, and I will see you in the next YT video.